Hello, I'm doing several short videos on stocks. This specific video is being done on March 2nd, 2021, and it's talking about meme stocks. There's no technically definition for a meme stock. It's a term that's been created largely to describe a type of stock that's being promoted via the internet or social media. The market is known for being constantly changing and for being manipulated by external forces. There's going to be hedge funds, there's going to be analysts. Meme stocks are typically being manipulated or promoted, however you want to look at it, by individuals or group of individuals that have banded together in a social platform. Two common platforms are Twitter and Reddit. Other ones are maybe depending on what product you're using, that app offers a community. So the Robinhood product offers a community where you can share investing ideas, and that may be a place where a stock is being turned from just a regular stock into what some people would define as a meme stock. So the typical meme stock has some characteristics you'll be familiar with. So a lot of times you can see a sharp spike. So what you start off with here is you have just sort of run-of-the-mill numbers, kind of flat line, maybe inching up a little bit. But what happens is all of a sudden one day you go from normal numbers to a big spike. Now, does that by definition mean it is a meme stock? No. Maybe they released new numbers that are out there that made the stock go way up. Or maybe something else happened with the stock that made it change in its value. Or if it's a meme stock, it most likely started getting promoted on Reddit, on Twitter, or somewhere else, and all of a sudden the sales went way up, and when they do, the price goes way up. The law of supply and demand. So you'll a lot of times see a peak, sometimes you'll see a second peak. So that is both of those are characteristics of meme stocks. But again, that's not the only characteristic. That doesn't define something as a meme stock. It's going to be important to realize this in a few minutes as we go through a few more slides. So what you typically see with a meme stock is a sharp uptick followed by a leveling off. So you'll notice here we had that sharp uptick and then we leveled off. And oh, by the way, every single one of these graphs I'm using is a meme stock that is that all these things have happened within the last month. And actually the growth that you're seeing here, where you see that sharp rise, every single one of those was a 24-hour period where you saw a sharp rise and then maybe even a second plateau and then a falling off. And again, that all happened within a 24-hour period. Same thing with this one here. We had that sharp rise, you had the second plateau, and then you had it go back to normal. So here's the good news. Even if you bought in before the rise or early on, the rise came up, even when it levels off, it's usually leveling off above what it was selling for before. So you can still make money even if you miss the selling at the peak. Just something to note there when you're trying to figure out your strategy for buying and selling meme stocks. Other characteristics is typically they're cheap. They may be penny stocks, 50 cents, dollar, $2, $5, $10. Why? It's easy to get a lot of people to start buying in 100 shares of this, 1,000 shares of this when they're cheap. It's not that easy to do when the stock is $50, $100. Although there are plenty meme stocks out there, or stocks that are considered meme stocks, that are in that price range. So cheap isn't the only one, but it is a very common one. Typically, these are volatile, meaning you saw in all the examples, each one of those were meme stocks that we were looking at before, where it was a big spike, sometimes a second jump, and then a fall back to grace or fall back to some kind of regular motion. And if you look at things like GameStop, what you've seen is several huge peaks, huge falls, stabilization, huge peaks, huge falls, stabilization. So volatile is one of the hallmarks of the meme stocks. And then questionable valuations. So a lot of times what you'll get along with you should buy this stock when a stock is being promoted is the fact that they're going to focus on a reason why you should buy this stock. For instance, there was a marijuana stock that people were promoting saying they had zero debt. The reason they had zero debt is they kept releasing more stock and selling it. So yes, they were able to pay off their debts. The downside is they had flooded the market with their stock and decreased its value that way. So while yes, they had done the one thing of it's a debt-free company, on the other hand, they had basically devalued their stock by putting so much out there. Another instance was a situation where a company was going to buy a much larger company, at least in evaluation. And they were promoting that once it be bought, the stock would be worth the price of the evaluation. Well, what happened was the $10 million company bought the company that was worth several billion, and so the stock didn't actually go up because the valuation of the stock did not change. Just the fact that they were associated with a company that could be evaluated at billions of dollars didn't necessarily resonate with the stock, at least not immediately. So there's things to consider there. So should you buy? There's nothing wrong with buying meme stocks. It's not nothing against the SEC at this point, and they're the only ones that can define if it's illegal or legal. Just be careful. Only spend money you don't mind losing, and consider it kind of like when you let somebody borrow money. If you don't know the old saying, don't ever let somebody borrow money you expect to get back. Same thing with meme stocks. Only put money in there that you can afford to lose. Don't put your life savings in there. You could win big, you could lose big. And the reason for that is if you started buying here, which is when it starts getting pumped, you're in great shape. The problem is pumping it led it to here, which if you bought anywhere in between those two eras, as long as you sell at the peak or somewhere near it, you made money, right? But what usually happens is they're being pumped and dumped. So the people who are pumping it, a lot of times are buying before they start pumping, low price. They get everybody else to buy in, raises the price. They dump the stock, which then decreases the price again. So you've got to be somewhere in between these two eras on the buy and sell to win. Doesn't mean you can't win. Doesn't mean these people are bad. But you don't want to be caught buying at the peak and then stuck with it because you're going to lose money. Typically use limit purchases when you buy your stocks. That way you don't get caught on a run up. Let's say you hear about a stock, you go in there to buy it. It's trading at the end of the day at $1. You go in there and do give me 1,000 at $1. Well, in after hours, it increases 100% to $2. All of a sudden, your market purchase went to $2. By the time it opens during the day, or $2 a share, it's gone back down to $1.50. So you lost 50 cents a share because you put in a market buy instead of a limit buy of 125 or something like that. So use the ability to buy a stock at a certain price as a benefit to you. I got burned that way by buying a meme stock. I put in a purchase price. The market price was listed in around $1.50. I put a market price purchase in, and when it actually was purchased, it was around $2.50, and then immediately dropped back down, and I lost about $1 per share on that purchase just because I didn't do a limit purchase. So understand dips as well. If you're going to buy, don't buy when it's on the way up and rising and rising and rising. Or if you do, make sure you're on the early end of that rise. Buy when it dips down. You can make money in between the dips. And I'm going to talk about why the dips happen, short sells and short squeezes, and dips, and how you can make money in the dips in another video. So again, nothing wrong with meme stocks, nothing wrong with buying them, nothing wrong with using them as a way to make money, a way to turn revenue. That is what the stock market is. It's a great opportunity to make money, but know what you're getting into. Go in with your eyes open so that you don't get burned and don't lose money. And also, know that you will lose some money. Your goal here is to win big and lose small. So set up stop sells, set up limit sells so that you make sure that you sell at a price that makes you profit, but don't get greedy. And also, you sell, excuse me, stop loss. I said it's the wrong thing a minute ago. Do a stop loss sell so that you make sure that you don't lose money in the process if the stock goes down.